can't just think about what's going on in the United States. We have to think of globally, why are rates going lower?
Yeah.
And obviously our yield curve is getting pulled down by what's going on in Europe. Again, we went from $6 trillion in negative debt, right, to $12 trillion.
Double that.
Yeah. Just since Powell said in October that we are nowhere close to neutral. So that was his first mistake. When he said that in October, that's what really
started the whole sell-off.
Yeah, exactly. So, and then we had the problem in December, which obviously they hiked.
Right.
And then we had the Christmas Eve massacre. So now he's finally getting his feet back under him and is really figuring out what's going on. And when you have the entire yield curve trading below Fed funds, that's a problem. So we need to cut, and probably sooner than later. So.
All right, Mike, let me bring you in on that. What is your base case now for cuts? And how would you, like, what previous period would you draw an analogy to now? Is it the late 90s? You know, do you see any signs of a real slowdown? You know, help us contextualize this.
Yeah, so our baseline now is we're looking for cuts in July and September. I think it's hard to draw perfect parallels with any period.
Yeah.
I think the 98 episode would probably be closest when they cut 3 times in response to a scare that was more financial than trade related, but which eventually didn't slow the economy all that much. I think hopefully that would be a nice analogy because in the long run the economy did quite well. But as I said, there's not a perfect analogy because we're not really having a financial issue right now. We have more of concerns about trade issues. We're starting to see that, right? You mentioned the jobless claims, which is true, and we watch jobless claims quite a bit, but we are starting to see some pockets of weakness in manufacturing and in capital spending. And if that starts to kind of spread out to the broader economy, then, the 98 parallel may cease to hold, and we may have something more like a more protracted weakness, which would, necessitate more than 2 cuts. But hopefully, we don't see that kind of economic dynamic taking place.